Are you a Florida homeowner considering a move within the state? Did you know that you can transfer some of the tax savings you've accumulated over the years through Homestead to your new property? Find out how on today's episode of Rockin' Real Estate News. Welcome to Rockin' Real Estate News, where we answer what's rockin' in Daytona Beach real estate. I'm Alice Cooper, and today we're talking about one of the advantages of Homestead exemption that you might not know about. It offers a huge benefit to homeowners who are moving from one property within the state of Florida to another. It's called portability. When you file for Homestead exemption, you'll receive three major benefits. You save money on your property taxes each year. The amount your taxes can increase each year is capped. And you'll also enjoy the benefit of portability. Now, this lets you transfer a portion of the tax savings you've accumulated over the years from when you sell your home to when you buy your new home in Florida. Now, portability wasn't always part of Homestead exemptions, so some owners may not even be aware of its benefit. It wasn't until the passage of Amendment 1 to the state constitution when portability benefits were added. Now, this was in 2008. So before then, homeowners who benefited from homestead exemptions were saving all of this money, but then when they sold their homes to downsize during retirement, their tax payments often increased due to the reassessment of their new property's value. So to solve this problem, the state introduced portability, which lets you transfer a portion of your tax savings and apply it to a new property. And it can be applied whether you're downsizing or moving to a larger home. Here's how it works. First, let's take a look at upsizing to a more expensive property. To calculate the portability amount for your property, you're going to need the market or just value and the assessed value of your current homestead property. To find these values, you can go to the property tax appraiser's website and find it there. Just type in the property address and then scroll down to the section that says Working Tax Roll Values by Taxing Authority. To find the portability amount, you're going to subtract the assessed value from the market or just value. And for the sake of keeping things simple, we're going to use some round numbers. So let's say the market value of this home is $400,000 and the assessed value is $275,000. Keep in mind that the market value isn't the value of your home that it's going to sell for, but the value determined by the county for your tax bill. So to find your tax portability amount, you're going to take the market value minus the assessed value, which gives you $125,000 in tax portability that can be applied to your new home. Now let's say the home you're upsizing to has a market value of $600,000. So we're going to subtract the portability amount from the market value of your new home to find out your new assessed value, which is the amount used to calculate your taxes. Your new assessed value minus any exemption, such as homestead, gives you your taxable value of $425,000. So even though you're moving to a larger, more expensive home, you save on your taxes thanks to portability. Now let's take a look at downsizing to a less expensive home, what it might look like, which is what portability was really designed for. And the calculation for downsizing looks a little different. When downsizing, you're going to take the assessed value of your current home, divide it by the market value to find the tax portability amount. So in this example, $275,000 divided by 400 gives you 0.6875, right? So now let's just say the property you're downsizing to has a market value of $200,000. Now again, this is not the amount that you're going to pay for your new home, but a value determined by the tax appraiser. You're going to multiply the market value of your new home of $200,000 by your tax portability amount to give you $137,500. Then you subtract any exemptions that you're going to have from your new taxable amount, and that gives you $87,500. So again, you're able to take a portion of that tax savings to your new home. Now, it's worth mentioning that the taxable value on both of these examples is not the amount of tax you owe. To find your tax due, you're going to divide the taxable value by 1,000, and then you're going to multiply that by the millage rate. There's a whole lot more that goes on into calculating property taxes, as well as a number of additional exemptions that you might be eligible for outside of just homestead. So if you want to learn more about property taxes and how they're calculated, be sure to check out episode 64, where we kind of dive deeper into this property tax calculations. Now, all of this is a bit complicated, but I've got an insider secret. If you call the Volusia County Tax Appraiser's office, give them the address of your home that you're selling, as well as the new home that you're going to purchase, and maybe some other basic information, they can calculate the portability for you. Easy peasy. So if you're a Florida resident looking to move from one home to another in Florida, tax portability can offer you a big savings. You have 3 years to apply for tax portability from the time you sell your homesteaded property. So even if you didn't take advantage of portability before you sold within the last 3 years, you can still retroactively take advantage of the portability savings. And of course, another benefit of homestead exemption is your assessed property value can't increase by more than 3% each year. So you're locking in those tax savings from here moving forward. Again, for more information about how property taxes are calculated in Florida, please check out episode 64. We'll put the link in the description below. So until next time, rock on, rock stars.